of the things in talking to you, Viva, that really strikes me is that you do not trade from a position of fear. And for
Mm-mm,
someone who has
mm-mm.
to live off of your trading, that's there's something to be said for that. And again, I think you have a lot of rules in place to make sure that you don't trade from a place of fear, and that includes fear of missing out, which is all really hard for a lot of people because one of the things we were talking about is you can see a lot of stocks come up and you're like, oh, I missed it gapped up, or I just wasn't paying attention. And you seem very disciplined again on not chasing things and recognizing, hey, I've gotta take my shot when everything is kind of in place, as opposed
Mhm.
to, oh, I missed it. I don't want to I don't want to be left behind. Let me chase this thing.
No, to me, I mean, this seems so obvious, but I think for a lot of people, they don't think this way. Cash is a position. And if I'm in cash, that doesn't bother me, right?
Mhm.
Like, yes, there's inflationary risk, whatever, but to me, cash is a position. And if I don't feel like I have a good, because buying right if you buy right, then you can let things come down, right? Like I shared with you guys, I bought Nvidia in 2016. I have sold most of it. I still have a small position in Nvidia, but when you buy right, you can sit through pullbacks, you can sit through drawdowns, you can sit through because you've already captured your gains. But cash is a position, and I believe that. I don't believe in chasing things. Palantir, that's another. It's a beautiful stock, and but not now. But it was a beautiful stock, and people were like, they're getting in at the highs because of that FOMO. But if you got in at the highs, I'm watching it now because it's very close to the 50-day moving average. It's come down super hard. So am I going to buy it now? No, but I'm going to look for it to form a base. And if I can get like a good entry point that is within 8% of the 10-week moving average, I will get in. But no, I'm going to look for strength. But yes, so a lot of people, they were like, how did you weren't in Palantir, or, like, didn't you have FOMO? I'm like, no, I missed it, but you have to be disciplined. And when you trade out of fear, like, I honestly believe this, right? Like, if you do anything out of fear, you're going to make decisions that aren't the best for you.
Yeah,
So,
absolutely.
and as you said, so again, I know not everyone. I'm so grateful for the life I've had. I'm so grateful for the opportunities I've had. But I keep a few years worth of cash because when I read How to Make Money in Stocks, Bill O'Neill had said that in general, again, you've got years that are going to be different, but I think the average correction was 2.5 years. I'm saying this to you, Justin. You probably know this way better than me. You can correct my numbers, but so my thought was, if I have 3 years worth of cash, even if the market crashes, I'm not worried about how am I going to pay my mortgage? How am I going to get food? How am I going to, I'm thinking from, okay, from a stock perspective, when is the right time to get in?
Right.
And so again, for people that aren't retired, for people that are working, think of it, it's like you have your paycheck, right? So, invest the money that you can, invest without being scared of it going down, because it's going to go down. You just have to be prepared. So for me, I've shared this before. I know all the best, Bill O'Neill, Mark Minervini, they have super concentrated positions. I was not able to do that. Why? Because I don't watch the market every day. If I had a 10% position and then or a 20% position, I missed something, it would like come down really hard. I couldn't sit and let it come down to the levels that I really like. So I go with smaller positions. And yes, does that mean that, because I'm not concentrated, that I'm leaving money on the table when I have an Nvidia? Of course. But at the same time, I could sit through Nvidia's drawdowns because
Yeah.
I let it pull back because I'm prepared. And, a number of people have said this, that the best stocks, when the market crashes, 80% of stocks will go down 50% or more, and maybe 50% of stocks will go down 80% or more. So am I prepared for that?
Hmm.
And I only will have a position size where, if that happens, not that I want it to happen or not that I'm expecting it to happen, but if it happens, I'm not, I'm not out. Like, I'm
Right.
still able to do what I need to do.
So let's shift a little bit to kind of a little bit more of the stock discussion, and then I want to circle back and kind of talk about the current market. But you are talking about some longer term holdings here on your stocks. So um, again, you're very you already told us about how precise you are on your entries for TQQQ. What about for stocks? What is it that you're looking for when you're getting into a stock? How much of it is fundamental? How much of it is technical? What's your process there?
Yeah. So I've been asked that before. I always start with fundamentals. So it's hard for me to put a percentage because if it does not meet my fundamentals, I don't even look at it. Again, I've missed a lot of stocks that had great technicals and I just never got in. And again, that doesn't bother me. So from a fundamental perspective, I am a can slim advocate.
Mm-hmm.
So I look for like very strong, even to kind of narrow it down, very strong earnings and sales, a minimum of 25%. Most of the stocks where I have done well, I think they had earnings and sales of 40% or higher. That's just going back and looking at my stuff. There's not any rule about that, but 25%. I look for the market to be in an uptrend. I buy early stage bases, stage one or stage two, as Bill O'Neill defined them. And why do I buy early stage bases? Because he said many of the great leaders, they do pull back. They will undercut the 50-day. They will undercut the 10-week when they're forming a new base. And again, hopefully at that point you have a profit cushion. But I'm buying an early stage base so that I can hold it for a few pullbacks and not, again, yes, it doesn't feel good when it pulls
Right.
back, but if it's to be expected and the great stocks have done that, then I'm thinking, okay, I have a position size I'm comfortable with. It's pulling back, but this is to be expected. It's going to happen, and I'm going to just let it do its thing. Yes, when you have it, when it comes down like a knife and it's not acting right, that's different. But a lot of the great stocks, they have orderly pullbacks, but they still
Mm-hmm.
come undercut, and so that's okay. So early stage bases, very strong, earnings and sales. I do care about like the institutional sponsorship. So I look at things like the up down ratio. I look at your accumulation distribution rating. You guys have made it so easy with the tools that you provide, and I look at price and volume. And again, I don't watch the news that much, but again, I've heard some rumblings about, okay, is volume accurate? Is it not accurate? It's not so much about the volume. It's more about like, look at the supply and demand. And to me, the easiest way to gauge supply and demand is the price and volume action. For other people, they might have other rules. But if, I'm looking at that and that's where I pick things. And so a lot of times when I'm getting in, I'm it's hard, like when the market right now, right, like we've had some recent pullbacks or whatever, but really the market has been going up since the end of 2022, right? So a lot of stocks are in like higher stage basis. So if I'm buying with the intention to hold it through pullbacks, I generally won't go in if it's a stage 3 or stage 4 base.